coming to each of these industrial metals, basically, let's start with copper. Copper is, the so-called, metal for the green economy, and it's there in dynamos, it's there in wires, it's there in, some of the thermal conductors and things like that, actually. So copper plays an essential role in the green economy to make it as efficient as possible. So keeping that in mind, and China, surprisingly had agreed upon to be a major player in the entire green economy game. And so keeping that in mind, so I was at one point in time thinking that copper will be, the market participants will be bullish about copper. But later I see that China is tapering down in terms of its imports and things like that. Where do you see the overall situation panning out in terms of copper in the global markets?
Sure. So let's look at the big picture first. So the three stories in copper. Story number one is that the demand growth from EVs would become so dominant that that would create a deficit. The story number two is that the people are not investing in mines, so which would be required at a later stage. And number three is that this goes with the industrial economy, the global economy. As the economy grows, the copper has to grow. So if you look at the mining growth story first, last year the mines struggled because there was COVID in South America and they had to shut down and there were multiple waves, so the workers were not coming, etc. This time around, I think all of us have learned how to live with COVID. So have the miners and the mining companies. So the mining output is rising, it is recovering. That's one reason of that people have come over COVID. The second reason is that over the last 2 years, two very large mines of the world in copper, the Freeport's Grasberg mine in Indonesia and the Codelco's mines in Chile, they invested heavily in the last 2 years for creating underground projects. Okay. And these projects are now ramping up. So that's the reason the mining output is very quickly rising all over the world. So the mining deficit story actually is a story of long term. This could happen from 2025 onwards. Till 2024, there's a consensus in the market that the ore supplies will be in surplus. So there's no shortage of supply till 2024. The consumption growth story and the refined output story also shows that we are back to 2018-19 levels. So we're not extraordinarily good, we are not bad, somewhere close to the 2018-19 levels that we have reached up to. But if you look at the big picture of copper in terms of inventories, you find that the inventories, global inventories, as compared to the previous year, is also quite comparable.
Okay.
It's not very high, it's not very
alarmingly
low. It's not
different.
Alarmingly low, alarmingly high. It's quite comparable. At the same time, we are seeing another important trend, which is that China is continuously slowing its import. Now, it comes on the backdrop of that last year, they created a strategic stockpile. We don't know the numbers. There have been numbers of 1 million ton to 4 million ton that they bought extra from the market and they kept it inside their economy, which they typically do every time the prices crashes. So market imports now coming down to normal levels. And as you can see, this is back to the 2019 levels now. This is leaving more surplus in the market, and that surplus sometimes is getting into the LME warehouses. The traders holding onto the material, waiting for China to come in and import more, now getting disappointed. And therefore they are putting those back into the LME warehouses. So that's the reason we are seeing copper reaching kind of balance now. The rhetoric, the narrative that was in February, March, April, that has
changed.
That has changed very slowly and gradually. It has changed.
Yeah, going back to, so since you raised about the inventories at LME and things like that, so now they have like a market of their own, which is Shanghai Exchange actually. So, and whose numbers are not known pretty much outside in the markets, unlike in LME. So, is there something that is also a wild card playing up actually, or no, not really? So, people who are there in the market do know what's there in Shanghai storages.
So the two parts of storage is in China. One is how much is the Shanghai warehouses.
Okay.
That's very much a public number.
Okay.
Every week they publish the number.
Oh,
Another one is the strategic stockpile that the government has done outside the Shanghai warehouses.
even of the metals. So we
Yes.
know about strategic petroleum reserves, but we don't know about the strategic metal reserves.
They
actually.
have a metal reserve.
They have a metal reserves,
large
and they do
metals.
maybe having a grain reserves.
And
Okay.
they have now started releasing. Now the price has gone up too much. They
Okay.
have started releasing the metal out of the strategic reserves. So August was the third batch of auction out of the strategic reserves.
Okay.
They're doing that.
So that's playing up in the
That's playing
markets.
out very
Actually.
much in the market. So if I just conclude on copper, it looks like there was no super cycle in copper. At least so far, we can't see that because demand supply is quite balanced now. It could happen in the future periods, but at the moment not. Supplies are looking good. The mining supplies are rising. China has enough smelting capacities. The only problem could be that the ores are not reaching China. There could be sea congestion issues. Other than that, we have the refining capacity, the mining capacity, enough capacities. So while the money is still cheap, people still want to play around with it. Copper is a fantastic story. But the micro story of copper's own specific demand supply story, is becoming a little balanced now. It's not that.
It's oversupplied or overconsumed sort of a
Yes,
story.
that story is no more there. It's much
No
more balanced story
Much
now.
more balanced, actually. So from here, it may go, somewhere northwards rather than southwards. So if the demand picks up. So that makes me to come to the next metal, which is, so we always consider copper as Dr. Copper, so to say that it actually reflects the state of the economy and its health and things like that. Of late, I'm seeing that, aluminium is kind of tracking the health of the economy, the global
Right.
economy, actually. So maybe one of the reason, I don't know what it is all about. Maybe I would ask you to. And the other thing which of late is actually bothering the markets, which is shooting up the prices in the markets, which I happen to read is the Guinea, the political instability in the West African nation of Guinea.
Right.
That's actually leading to a large part of bauxite supplies, which is going to get into the Chinese smelters, are not getting onto even the ports actually.
Right.
And the story is that even Australia is not able to supply to Chinese because of trade concerns and their own port concerns and order commitments and things like that. So how is this playing out in
Right.
aluminium? So
As you rightly pointed out, the aluminium story is a supply side story. So the production of aluminium has almost stagnated in this year, in the first 7 months of this year. And this is largely to do with the point that you made, is that either inputs are not available or electricity is not available. And this has been playing out specifically in China. So aluminium prices going up is quite typical where of the cycle where copper starts the first, aluminium is slow to
Follows
move.
it up.
Yes, because a lot of inventory that piles up for aluminium, which takes time to consume, and then aluminium is next to move. So sometimes I call aluminium as elephant. It takes time for it to
It's a
stand
big
up
animal to
and
move, actually.
exactly, and then
Okay.
start moving, which started happening. But the aluminium supply side stories are really grave. As we discussed that in the macroeconomy discussion, that there is a shortage of coal and natural gas that we're seeing all around the world, because of which the electricity supply is becoming difficult. And the winter months ahead for the northern hemisphere, where the heating demand, electricity demand for the heating purposes actually goes up. So they need more natural gas. And the natural gas inventory in Europe is at the record low level even before the winter's not started.
Yeah.
So there's an acute shortage that the world is staring at. So because of which the electricity prices are already rising, and the Western world is passing on to the consumers. The Eastern world is not doing it. And because of which a lot of electricity companies are running into losses, or they are stopping production.
Correct.
And because of which there's a rationing of electricity happening, which is affecting the aluminium output, especially in China. So as you can see, the second chart, the aluminium global production, second chart, Chinese production actually dipped in the month of July because of all these cuts. It's possible that this dip gets a little more deeper in the coming few months.
Okay. If let's say, so I was just going to the next factor which also determines what is the aluminium supply or the demand is likely to be its price, but its price in a way is driven by the energy costs actually. And energy costs, because of the greenwashing of the economy and hence the power sector and things like that, is also going up. So of late, heard that like China is also getting aggressive on the climate change and good for the world as a whole. But that's a price that we are now paying for aluminium as well. Is that correct? That energy, because aluminium is an energy intensive refining process.
Oh, absolutely. I mean, the cost of energy is going up for sure. Um, I I would say that once we have the non-conventional energy production in full stream, obviously the cost of electricity would be lower as compared to, or maybe comparable to the current levels. But we are halfway through in a way. So whenever the seasonal disruptions, which is affecting the non-conventional energy production, we go back to the conventional energy production, and that creates a lot of disruption in the industrial economy, which is what we are seeing at the moment. So yes, obviously it will affect the industrial cost of production of all the metals, but at the same time, I guess over a longer period, it would not have much impact on the cost as such.
On the cost as such. Okay. So how about the aluminium stock side? How is it looking like? And
Right. So aluminum stocks have been declining because obviously the production is not able to catch up with the demand recovery that we have seen. So it has declined across the board. So LME off exchange, LME off warrant, on warrant, Shanghai, everywhere the stocks have declined. Um,
and how about the strategic reserves with China maybe?
China is doing that,
Okay.
but that's very small.
Okay.
So that
Compared with
can't really,
copper. Compared
that's
with copper.
compared to the deficit that the economy has at the moment. So China produces nearly 3.2 million tons um, of
Aluminium.
aluminium every month. So if there is, let's say, 5% or 10% deficit, that's huge enough. No strategic reserve can really compensate it. And no economy is actually ready for it. So there is a deficit. The deficit can be compensated only when the production comes back to normal. The coal supplies are normal and the gas supplies are normal. But what we are seeing is that China is doing what it does the best. It produces aluminum, converts into value-added products, and exports it out. It has been doing it, so exports are recovering, but the recovery is far slower than what it could have been, given that the price has gone up so much. It's so lucrative, in fact. So it's going to take time for China to recover. Till that time, the deficit in aluminum is here to stay.
Is here to stay.
Yeah. So overall, I think the two parts of the picture. One is that the prices are so high that it's killing demand. It's affecting demand. The industrial, so durable goods sector is one. The electrical sector is another one. So demand is getting hampered by too high a price. But at the same time, we have no solution to the supply deficit that's happening. So from that point of view, the micro story of aluminum, as compared to copper, is far better. It's far stronger. So aluminum looks to be holding these levels around these levels for some time, till the time we find a solution to the.
It may even hold in the next quarter as well.
I think the prices could remain high. I wouldn't say that the prices would remain these levels, but prices would remain at elevated levels for the next quarter as well.
In the next one quarter. Yeah. So coming to the next metal that we always talk about, which is I would say that the savior of the metals, so to say, that actually it protects all the metals from rusting and all the environmental damages that it gets, which is what we talk about, or zinc actually. So where it is headed towards, zinc is basically supposed to follow the ferrous metals side, and what is the growth in the steel market, what's the growth in the infrastructure, and especially given that in US they came up with this big infrastructure bill in terms of developing infrastructure and things like that, where zinc is headed towards.
Right. So zinc, as you rightly say, it is a metal which is very closely linked with the steel. So along with the recovery in the global economy, the steel consumption has also recovered, and that has pushed up the zinc consumption as such. Zinc production also caught up, especially in China. So in 2018, 2019, China added very large smelting capacities. So that started working, and so the production started to recover in China. So as you can see in the first chart, the output growth of zinc is coming from the low base, but it's come back to normal levels. It's quite recovering. Zinc production in China is doing good. Overall, zinc is not a supply issue at the moment. Zinc is very well supplied. The issue could be that the ore's not moving from one part of the world to the other.
Okay.
The refined metal is not moving. It could be a shipping issue. But in terms of the global availability of metal, zinc is very well available. It's and so if you look at the metal balance, which is taken from ILZSG, it shows that 2020 was a year of surplus. So 2018-19 was a year of deficit. 2020 a massive surplus because the consumption slowed down. But 2021 again started with a surplus. It's going into gradual deficit at the moment, but overall it's still a balanced year so far. And that's what's reflecting in inventories. Inventories of zinc are today, as compared to previous year, almost comparable. There's not much change. And also from LME, we are not seeing, from Shanghai, we're not seeing much demand for withdrawal of those inventories, unlike
In the case of
aluminium,
aluminium or
exactly.
copper.
That's true.
Okay.
That's true. So if I could just conclude on zinc, looks like the demand and supplies both are back to 2018-19 levels. And metal is very well supplied, inventories are stable. To answer a question about US infrastructure, so US has an ambition of going ahead of China. So they want to invest in the infrastructure the way the Chinese did. But they also realize that it requires a massive investment. US is in a hurry, Biden is in a hurry, and they want the Congress to approve large budget. But having spent so much on nearly $5 trillion in COVID fiscal stimulus packages, government's budget deficits is already a record high level.
They would have less team to gather rather than putting it all into infrastructure.
Into
budget.
infrastructure. So somewhere the consensus is not coming in, and because of which the infrastructure bill is not coming forth with, it's not getting passed, and the discussion is still ongoing. So we don't know when it comes out, but it's possible when it comes out, it doesn't become a $3 trillion bill. Maybe it comes out to be as a $1 trillion bill. It's more gradual investing rather than one go investing that Biden wanted.
So zinc is going to be, going forward, linked to the steel demand, and if the steel
Yes.
demand does pick up, we will see pick up in the zinc demand as well, actually.
Yes.
So coming back to nickel, which has a little bit of a energy value, and it also has shining value to the the
Stainless
metals
steel,
actually.
yeah.
So its demand is also a sort of demand which is linked to energy demand, the green energy demand, and things like that. And its demand is also linked to the demand for steel, which is one segment of the steel, which is stainless steel and things like
Right.
that. Actually, so where is nickel headed for?
Right. Right.
In terms of
Right. So the demand for nickel from the electric vehicle sector is surely pushing up. And that is helping the Chinese inventories to come down. So China passed a policy on the battery segment, and it encouraged the use of nickel for EV batteries instead of lithium and instead of cobalt, actually. So that helped the demand for nickel to push up, and so demand side story is good. But yet, a large portion of nickel is still used in the stainless steel sector, which is linked with the infrastructure spending and the construction business. That construction business in China is on a slowdown. We are seeing cases like Evergrande and other companies actually getting into bankruptcies. So the government is purposely wanting the infrastructure. So it's residential and commercial construction business to slow down.
Slow down.
So that is hurting the demand for stainless steel and thereby the demand for nickel. But it's getting compensated partly by the EV demand. But the bigger picture in nickel is still a supply side issue, because Indonesia, which is the largest producer of NPI based nickel, that was closed down for nearly 2 months. So that disrupted supplies. And China over the last few years had put all its capacities or large part of its NPI capacities into Indonesia. So that output has slowed down, so because of which there's a crunch in nickel. As soon as these economies come out of COVID, maybe the nickel supplies would start to ease. So in the short term, yes, there is a deficit, but over 2022, I would expect the prices to start easing. But yes, in the next quarter, the prices could remain supported, something around these levels.
Okay. And getting into battery demand for nickel, so that's not a big factor. That's not going to compensate for the loss in the the so-called stainless steel side, right? So it's just a small mixture into the entire
Yes.
cobalt or lithium.
It's a very small sector at the moment. It could become a critical mass over the next 4, 5, 6 years.
As EV grows.
As EV grows.
Not at this
Not
point
at the
in
moment,
time.
yeah.
Okay. So going to the next, which is again the battery metal
Yeah.
actually, which is lead actually. So where are we located? And especially India has a larger role to play because India has a very large reprocessing industry.
Yes.
Battery reprocessing industry. Where are we located in terms of lead, stocks and prices are concerned for the next
Right.
quarter?
So lead has been a classic story. It's an amazing story of base metals. I would say it's a case study rather, because if you look at the vehicle sales, which is getting hampered by the availability of semiconductors. So the output is coming down and therefore sales coming down. As you can see, the sales peaked sometime in March all over the world and it's been coming down since then. Most of the forecasts from Toyota, from Maruti Suzuki in India, everybody expects the output to remain low for the foreseeable future. Yet lead prices went up and the LME inventories of lead went down to near record lows. The reason why that happened was because of the sea congestion.
Okay.
So the metal was available in Asia, but it was not reaching out to the Western world where the demand was, and therefore they were pulling out metal inventories from LME warehouses. So the lower LME inventories pulled out the investors. So they said, "Oh, they're pretty low." So bulls came in. But the bigger picture for lead is really, I would say, a little bearish because the demand is soft. The other part of lead is that the recycle, as you say, the recycling industry in China and India, that's doing pretty good. So because of which the inventory of lead, if you really see in China, has gone to a record high level.
Okay.
So while the inventories, LME has gone down, Shanghai has gone up, overall global inventories have gone up. It's just that it's not getting transported to the place where it should be, to the consumer's place. So given the global picture of demand supply, slowing demand, and the global supplies being ample, not that positive on lead going forward. I think once the sea congestion starts to ease, lead could be the first metal that get negatively affected by the bears, slamming the prices lower.
So another factor to add to that is like your chips. So as long as the chips are in short supply, so automobiles will be short in production, and so would be the battery demand as well. But again, so we cannot say that so because batteries are getting replaced even in the running cars as well. So
That's right.
right. So maybe it's a plus and a minus, but again, I would say that in the COVID situation, that people are resorting to private mode of transportation, and so that needs more of battery and battery metals to be intensively used, and
Absolutely.
so that could even have an impact in the short term for lead in terms of if the battery metal demand goes up in the next 1 quarter or so.
Absolutely.
Okay.
Absolutely. Yeah.
And how is the overall situation panning out in terms of lead in the next 1 quarter?
So For lead, I guess, one, as you say, that people want to buy vehicles. In the COVID time specifically, the demand for personal vehicles have gone up, so that helped the demand in a way for lead. But going forward, looks like the most of the unlocking gains are now known, so that's out in the open. So the demand is now tapering. One, because not production is not really catching up. Another is that people have enough vehicles now. So somewhere that's tapering, and because of which I think the next quarter, in October, November, December 2021, I would expect lead demand to remain low, and the exports that is happening from the Asian economies, the recycled lead, that would go out of the world because that's been there for a few months now. So eventually, when that reaches out to the area of deficit, which is the Western world, the prices would come in terms with it, and prices would slowly and gradually glide. So lead is a metal where I don't see too much of bullishness in the next quarter.
In the next one quarter or
exactly.
so. Okay. Okay.
Yeah.
Sure. Thanks a lot, Sandeep, for being with us and sharing your insights about each of the metals in short. And I'm hoping to have you again in the next quarterly review. Let's see how this situation is turning out to be. Thank you once more.
So pleasure's mine. Thank you.
Thank you.